Hello, I'm John Cunningham. Welcome to the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Today on the show, you'll see interviews with executives of 3 public companies. First, Level Brands, stock symbol LEVB on the New York Stock Exchange American. Level Brands has exploded onto the multi-billion-dollar CBD market with its transformative acquisition of CBD-MD in December. A popular CBD brand in the U.S., CBD-MD's products are already available in over 700 stores nationwide. With the clout of Kathy Ireland and the Level Brands team, distribution is expected to soar in 2019 and beyond. Over the next 5 years, the company is aiming to generate a total of $300 million in sales. With that type of growth, it's sure to attract attention from the big players on Wall Street. Up second, Nemaura Medical, stock symbol NMRD on the NASDAQ. Nemaura is a medical technology company developing a flexible and affordable non-invasive continuous glucose monitoring system that's called Sugar Beat. They recently completed the second of 3 stages for a CE mark approval in Europe, and sales are expected to kick off in key markets upon the final approval. Globally, continuous glucose monitoring is an $82 billion market annually. The final company you'll meet today is Adventego Corp, stock symbol ADGO on the OTC. Adventego is a digital communications and enterprise software company. Their focus is on specialized business process as a service offerings, puts them in an ideal position to generate growth, recurring revenue streams from a variety of industries. We'll learn more when we speak with the CEO later in the program. Now, before we get to our first interview, our quote of the week. It comes from the book, Small Stocks, Big Money. Get to know management, look for intelligence, a high level of integrity, strong communication skills, and make sure they understand their products and business well. This quote comes from Charles Diker, featured in Chapter 9 of Small Stocks, Big Money, a book of exclusive interviews with some of the biggest players in the microcap space. If that's something that interests you, pick up your copy at our website or at Amazon.com today. Now let's go to our first interview today. It's with Marty Sumichrast, Chairman and CEO of Level Brands.
Marty, thanks for being with us today.
Well, thank you, Dave. Thanks for having me.
You recently completed the transformational acquisition of a leading CBD brand. Talk to us about the acquisition and what it means for the company.
Well, thanks, Dave. Yes, we did. In December 2018, a little less than a month ago, we closed the acquisition of CBD-MD, which is a up-and-coming and now one of the leading CBD brands on the market today. CBD-MD, based here in Charlotte, is founded by serial entrepreneur Scott Kaufman. Scott has had a long history of building brands and exiting brands. His biggest success, I think his most notable success, was he got into the e-cigarette space early before most people were in it. He started a company called Blue, and within 40 months, with very little capital, he built Blue and sold it to Lorillard, the giant tobacco company, for $135 million in cash, and Blue still is in many convenience stores and is one of the biggest e-cigarette brands in the country today. So CBD-MD provides us with an incredible growth story at Level Brands. As part of the transaction, Scott and his team have put forth milestones to receive the full payment, $300 million in revenue, Dave, over the first 5 years, which should make CBD-MD one of the leading CBD brands on the market. And of course, you know, being the first New York Amex listed company, the only other competitors that we have out there are foreign listed or Canadian listed. We think that it's an incredible opportunity for our investors. As you know, we raised some additional capital, so we're very well funded, and we're pushing ahead with CBD-MD, and there's going to be a lot of great things to talk about here in the short term. So talented group, we have manufacturing, distribution, and we really just have a tremendous growth story in front of us.
Well, how big is the market opportunity for CBD, and how does the recent passage of the Farm Bill fit into your overall plans in that market?
Recent studies have suggested that CBD market in the United States in 2018 was well under $1 billion. Now, with the passage of the Farm Bill, studies are suggesting that the CBD market could grow to over $20 billion in the next 5 years and possibly over $50 billion within the next decade. So we are in a really large rising tide environment. What separates CBDMD is we're not a company that's putting CBD into existing products. We are a pure play CBD company. And we recommend everybody goes to CBDMD, our website, check out our products, and we'd love you as a customer.
Marty, what's the essential value proposition, having said all that? Why should investors consider owning the stock today?
The reality is that you have to put us in the same comp set that some of the other public companies are in. When you do that, you look at the average price to sales ratio, just CBDMD's current price ratio, we're in line with the current market comps. However, our growth rate is significant. And the milestone achievement payments that we have in our deal with the acquisition of CBDMD expect us to do $20 million in 2019, $40 million in 2020, and $300 million in the next 5 years in aggregate. So when you take those growth rates, multiply it times the average comp, we have a compelling advantage against our competitors. And as I said, we're NYSE Amex listed. So we think that provides us a tremendous amount of credibility.
Let's talk about management for a minute. Who are some of the key players?
Well, first of all, I founded the company with Kathy Ireland, and Kathy's still involved in the company, and she serves as chairman emeritus and chief brand strategist. Myself, my CFO, Mark Elliott. CBDMD brings an incredible team of over 50 people, as I said earlier, founded and led by Scott Kaufman. Karen Dunayer is a remarkable, well-accomplished brand builder and has been involved in the CBD space for quite some time. And the depth of the team, and you're going to see us bringing in additional top-notch people to join the team. And people are coming from all corners wanting to join CBDMD on this journey together. So we're excited about that. We have a great board as well. Anthony Shriver, founder of Best Buddies, Bakari Sellers. You see him on CNN, attorney, incredible political commentator, and has a great view into what's going on in Washington, which obviously is important for us. So we really have a good, excellent, deep bench, top talent, and we're excited about the future.
Yeah, your legacy business includes Kathy Ireland Wellness. Can you talk to us about the legacy business and how that fits into the overall strategy?
You're correct. We have a 10-year license that we purchased from Kathy Ireland Worldwide, and the license is for Kathy Ireland Health and Wellness. Our goal is to integrate that with CBDMD, and we're looking right now to figure out the strategy for doing that. So we think that having that in-house with our own brand is a powerful tool.
Now, you do have a $100 million shelf, but I don't think you have a need to raise capital at this time. Can you talk to us about your capital raising needs for the future?
Yeah, we are well capitalized. We filed a shelf as really a housekeeping matter. I know a lot of people had questions regarding whether we were going to go to the market. As I said before, we had raised $7 million in early October. Anticipation of hopefully doing something like what we did.
In summary, what's the key takeaway for investors today?
When you look at CBDMD, you look at companies in the space, there really is no leading brand in the space. There are some competitors who have had a jump in the space and have been around and are doing well. But as far as creating a brand, that's what we're after. We want people to recognize CBDMD as the leading brand in the CBD space. And all of our marketing messages, our sponsorships, the people that are already, our customer base is incredible. The growth rates are just astonishing right now. We're very excited about it. So I think the takeaway is look for CBDMD to be on your store shelves. I use it myself. It's fantastic. I've got tons of friends who are using it. It's a tremendous, tremendous product, 100% US grown, and we're very proud about that. Well, the takeaway is you're going to be investing into a well-managed company with a tremendous brand opportunity in a huge growth market.
Marty, thanks for being with us today.
Thank you, Dave. Thanks for having me.
Now, to get more information about Level Brands, visit levbinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to an email alert to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now, our second interview today will be with Faz Chowdhury, CEO of Nemaura Medical. Let's go to the interview.
Faz, thanks for being with us today.
My pleasure.
I want to start with a brief overview of your company. You have a very innovative technology focused on the global diabetes market. So give us an overview and tell us where your company is today.
Absolutely. So we've developed what is a non-invasive continuous glucose monitoring platform, which is in the form of a small patch which communicates with a mobile phone. And where we are today is that we've completed clinical studies for CE mark approval in Europe, and that CE mark review is currently in progress. And we've also commenced clinical studies for a future FDA submission, which we anticipate in the coming months.
Faz, what makes your product different than your competitors?
So there are a number of aspects, and first and foremost, our device is non-invasive. So whereas all of our competitors have some form of sensor that is inserted inside the skin up to 1 millimeter, and you're left essentially with an open wound, our sensor sits only directly on top of the skin, so you do not have that invasive element. Secondly, it is highly flexible, therefore you can wear it when you choose, once a day, multiple times a week, etc. You're empowered essentially. You don't have to be wearing it all the time. And then from a price perspective, we expect it to be far more competitive. But importantly, in light of the flexibility, what it does is it opens up a far bigger market who can now actually benefit from the system. And by market, what I mean is that most of the current invasive devices are used by type 1 insulin dependence or type 2 insulin requiring patients, whereas here, now we can open up to the broader diabetic population, which is another 75% of the market, plus the pre-diabetic market.
It is also, understand the technology, this is also a device that can be used for patients that are still pre-diabetic that could become diabetic, which opens up a very large market opportunity, correct?
That's absolutely right. So if we take the US as an example, whilst you have around 25 million diabetics, there are in the region of 50 to 60 million pre-diabetics, and most of them don't actually even know. And of course, the ideal way to measure that and to establish whether or not you potentially are pre-diabetic is to get a glucose profile over the course of a day or several days to see how different challenges actually impact your ability to maintain a consistent glucose profile. So absolutely, we expect our device to cater for both the pre-diabetic market as well as the diabetic market.
And again, you have CE mark approval coming, or you have it now, today?
So when we developed the technology, we did it on an iterative basis. So approximately 2 years ago, we received a CE mark approval on a device which was a wristwatch format. So since then, we've updated that into a very small unit, which has been miniaturized, and now it adheres directly to the arm, for example. And that is a device that is currently undergoing CE review, and we anticipate that the approval should come through in a matter of weeks.
And again, for our viewers, CE mark approval is approval for Europe. How big is the market in Europe?
So I would say that the market in Europe as a whole is equivalent to the market in the US. The US constitutes approximately 40% of the world market, and approximately 40% is constituted by Europe, and then the rest of the world. So Europe is a significant market. And initially, we will be looking at launching in the UK. And of course, the advantage is that the CE mark will allow us to launch throughout all the major European territories.
Now, talk to us about the essential value proposition. The stock's currently, as of the date of this recording, about a 430 million market cap. But what's the essential value proposition for investors? Why should they consider owning your stock today?
The key thing to bear in mind is that where we are today as a company, we have almost reached that inflection point where the technology is about to be launched onto the market. And we are not looking at raising investment, for example, to do further research and development at this stage. This is about commercializing product. This is about getting product out there to the market, devising marketing strategies for the various territories. So it is probably the most exciting stage of development that a technology company could reach for an investor to be interested. So I think the value proposition is quite significant in that regard.
And you also recently published interim data for SugarBeet, which is the actual product. So talk to us about this interim data that was just published on the product, which is called SugarBeet.
Absolutely. So as part of the clinical study, there are two arms to it. One arm, which is where patients come into the clinic, they have a catheter inserted, and we remove blood samples to compare with our device. And the other arm of the study is where the patients take the device home and they use it in a home setting. And of course, the home setting is by far the most challenging setting. And the initial cohort of 25 patients, we took the data from that and we compared it to an independent study that was published recently by US-based researchers. And they compared the home-based data taken from devices the likes of the Abbott Libre and the Dexcom, and they published it in comparison to the clinical data that these companies have published. And what it shows is that the average deviations are actually slightly higher in the home setting because it is a more challenging environment. And therefore, we thought, actually, if there's any data to present, the home data is by far the most challenging. And for that reason, we presented the home data. And what it shows is that the accuracy levels we're achieving is actually comparable to the likes of the Dexcom and the Abbott Libre.
Now, to get more information about Nemaura Medical, visit nmrdinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now, our third interview today is with Rob Ferguson. He's the chairman and CEO of Adventego Corp. Let's go to the interview.
Hi, Rob. Thanks for joining us today.
My pleasure, Craig. It's great to be with you.
Let's start the interview with you giving us a brief overview of your products and services.
Okay, a quick overview of Adventego Corporation is we are a digital communication and enterprise software provider. We do this through two wholly owned subsidiaries, Adventego Technologies, located in Irvine, California, and our sales and marketing operation in Henderson, Nevada. We do this utilizing a proprietary platform, and we deliver these products as a specialized business process as a service. So that's kind of the 2-minute overview of what we really do.
Now, it sounds like Adventego is involved in a lot of industries. How do you determine which projects to work on, and what's the priority?
Good question, Craig. Over the period of time that we took over the company here back in October 2016, we've had the opportunity to develop a number of strategic partnerships with third-party, best-in-class technology providers. And though we have a library of technology that we have at our beck and call, you might say, we have focused on just several products right now, moving out the door and into 2019. Adventego TV, which is a patented digital signage controller product that we've integrated a couple of other solutions with, our Adventego directory listing product, and then our convertible note disclosure report, which is on the enterprise side of things, are the specific three that we're basically rolling out and putting our focus in today. It doesn't mean that as things come up down the road, we'll be able to go into this library of products and services that we have available to us and address some specific need. But you're right, we have a large variety. We have some tremendous technology partners that have partnered with us. And as things come up, we don't have to go looking for it. It would be right there. But first things first, and the idea is let's get sustainable, let's get profitable, and then we'll expand our product base.
What's the essential value proposition for Adventego? Why should investors take an interest today?
Okay, so the value proposition as it relates to Adventego versus maybe some other new or infant software provider is they typically need large amounts of capital. And you go out and you'll find a specific niche in the market. You want to go raise a bunch of software capital to develop this thing, where we are already 60 to 70% done with any particular application that we may address. So by having this intelligent solutions platform, all we'll do is add to certain things within the modules that are already available, and we can get to market with a product not only quickly, but very cost effectively and beat the pants off anything, which means that our rate of return on our invested dollars is astronomical compared to the normal recovering of capital that your typical startup software companies have.
Now let's discuss that proprietary intelligent solutions platform. What is it, and how does it give you an advantage over your competitors?
Okay, so our intelligent solutions platform is made up of a number of modules. It's a large enterprise software system in itself. And what it does is it allows us to integrate these third-party technologies into these particular modules as need be. So the system itself, it's got workflow, it's got security, it's got communication systems, it's got a hub where we can integrate third-party existing data and systems. And so it's made up of a number of different modules that allow us flexibility that, that into itself would be a business. In other words, going out, raise the capital to build this platform to go do what we do. But we already have that, so this is able to shortcut it and allows us to basically take, your good application and put it in our platform, send it out to the market, and basically go out and compete with everybody. We're 60 to 70% done before we start, and that's something that most people don't have.
Let's focus on your business model, Rob. How do you make money?
Well, Craig, we basically find a specific niche in a market, put together a product, configure it, we deliver it to the marketplace. We make our money initially when we make the initial sale, and then long term, our whole goal is recurring revenue. So once somebody pays me once, I expect them to keep paying me, and as long as we do a good job on the customer support and maintain a good customer retention, our customer acquisition costs, decrease as time goes on, and that's how we make our money.
Rob, how big is the market opportunity for these products and services? How much of this market do you think Adventego can capture over the next few years?
That's a really good question, and we kind of look at the world as our boundary. And so what we've kind of done is taken a step back and look at some low-hanging fruit in some specific markets, some specific technologies, and kind of focused our efforts here getting into 2019 with our Adventego TV product, our Adventego business listings product, and the convertible debt as we roll into 2019. There are other products that we have on the shelf that we're developing that once these then get the traction, we get to sustainability, which we think we can do, say, mid-year next year. We'll then unleash these other ones. But the market itself, a lot of these markets are so big, if we just get a fraction of it, that'll be great. And once we get to a point where we're not seeing the growth based on the number or the amount of money we're spending marketing-wise, we've probably tapped out at that, and then we're going to just adjust to customer support, customer retention, and that kind of stuff. And then on the other side, where we have niche markets where you don't have a lot of big guys in it, it's kind of like the convertible debt report that we're doing. Nobody's doing that. And so we can get into that, and we expect to get a large share of that market. Maybe we can get 10, 20% of that market, which would be substantial. So it just depends. Can't really put a handle on it. Just as long as we're making money, it doesn't matter to me. We look more in terms of revenue and profit rather than percentage of market.
Rob, to recap, what's the main takeaway for investors? Why should they own your stock today?
I think the best opportunity is when you get into an investment with a young company that has a vision and a focus and has flexibility where it doesn't need large amounts of capital to execute. And we've been able to do that and provide that. And as we move forward in this particular situation, since we are so young, we're able to scale things and increase revenue and profits at a greater percentage than you can when you become a big mature company, as maybe 5 or 10 years down the road, which from a standpoint of an investor today, you can get a bigger bang for your buck today than you can down the road. I mean, we're not an Amazon or a Google or any of those guys, but then when you get to that point, yeah, you're very mature, you're very predictable, but the ability to get an upside and a rate of return on your investment, it's nowhere near where you can when you start, at the beginning of something. And that's where we are today.
Makes a lot of sense, Rob, and it's a great story. Thanks for being with us today.
Appreciate it, Greg.
Now, to get more information about Adventego Corp, visit adgoinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. Now, it's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now, let's recap the 3 public companies we met with today. First, we met with Level Brands, stock symbol LEVB on the New York Stock Exchange American. Level Brands has exploded onto the multi-billion-dollar CBD market with its transformative acquisition of CBD-MD in December. CBD-MD products are already available in over 700 stores nationwide. With the clout of Kathy Ireland and the Level Brands team, distribution is expected to soar in 2019 and beyond. Over the next 5 years, the company is aiming to generate a total of $300 million in sales. That type of growth is sure to attract attention from the big players on Wall Street. Visit LEVBinfo.com today to learn more. Then we spoke with Nemaura Medical, stock symbol NMRD on the NASDAQ. Nemaura is a medical technology company developing a flexible and affordable, non-invasive, continuous glucose monitoring system that's called SugarBeat. They've recently completed the second of 3 stages of CE mark approval in Europe, and sales are expected to kick off in key markets upon final approval. Globally, continuous glucose monitoring is an $82 billion market annually. Even modest market share gains could lead to exponential upside for this stock. Visit nmrdinfo.com to learn more. The final company you met with today was Adventego Corp, stock symbol ADGO on the OTC. Adventego is a digital communications and enterprise software company. Their focus on specialized business process as a service offerings puts them in an ideal position to generate growth, recurring revenue streams from a variety of industries. Visit adgoinfo.com today to learn more. Now, these stocks are for your speculative money. Gains can be significant, but you must be prepared for the downside. Clients on this show may sometimes pay us in stock, and while you are buying, we may be selling. You can read our full disclosures at redchip.com. And if you know a public company looking for investor relations services, don't hesitate to give us a call at 1-800-RedChip or email us at info@redchip.com. Thanks for being with me. I'll see you same time next week.